Hey, how's it going? So, I typically like to keep it, as I would like to say, keep it simple, stupid, right? Kiss. The reasoning that I'm kind of bringing that up is typically I like to keep the simplest trading styles um, as my main style when I'm trading. Again, everybody has their own style and their own purpose and their own way, right? Of the reasoning behind they make a move or the reasoning behind they make a trade. I want you guys to understand a lot of the reasoning behind my specific, which we'll also see in FS 2.0 when we release all the content for the trading and everything like that. But I mean, my style is my own, right? At the end of the day, I do use some indicators, I do use some different things, but these are more to kind of weigh my decision versus make my decision, right? In reality, I don't believe you should ever make a decision based off of a indicator, but in reality, also you can still use them to your advantage to understand if your move is true or if it's not true. So again, from my own perspective and my own style of trading, I do value the RSI, I do value the stochastic. These are two indicators that are great for indicating the market direction. They're great for understanding the move on the market and, as far as overbought, oversold in this specific zone or in another zone. Currently, the market is looking, in my opinion, just overly, overly bullish. And I take the RSI as another measure when I'm looking at something like an incline wedge, right? And this is not looking well for the RSI. We're basically looking at, sorry about that, the stochastic, looking at it in a similar position. I mean, the markets don't look healthy at all. You can see the money flow in, like it's just a flood of money just coming into the markets, right? Um, Market sentiment to me is overly bullish. I know a lot of people are saying, hey, bearish, bearish. Like, ignore the influencers, understand the charts. In my opinion, they are bearish. And, if an influencer is calling that right now, it's probably one of the better calls they've made the whole year. We got to understand that, there's such a thing as a crowded trade and a non crowded trade. Currently, what we're looking like in the current market is a very, very crowded trade. Not only in the S&P, we're seeing this across almost every single stock. Look at Amazon here. Again, I'm expecting a pullback. This, ideally, I might be looking to get into something with this as far as a put to the downside. I'm expecting this gap to fill. This for me is pretty much, again, I believe in gaps too, right? So when it comes to stocks, gaps are great trades. Gaps typically fill, aka gap right here. Price did what? Came back up and filled the gap, right? Now we got kind of a double gap zone in here, so it's looking really bad uh, for a lot of these assets. So I'd be really cautious right now. The market's looking really shaky, and really, all it's going to take is just the tiniest bit about amount of bad news, and we'll probably see markets just tank really bad. It won't take much to tip these things. Like they're in a very bad position, in my opinion. And I know a lot of people look at the VIX and they're like, okay, VIX is coming down. This is part of the narrative, but we got to understand the VIX is still building long. The floor on the VIX is 17.78. This is still a building long structure on a bigger scale, right? When you're talking multiple years going, we're almost near the bottom. The VIX can definitely reverse for the S&P. It doesn't even have to hit trend. It can just take off from where it is. These are big indicators to me that are telling me market is far overheated, far, far, far overheated. Stochastic, you're running top, running top, running top, running top. You're doing the same thing over here. You're kind of hitting that upper threshold. Any TA guy, okay, and this isn't crypto. You can say, okay, crypto can run the top forever. No, any TA guy, look, every time we peak in these zones, we always come down pretty dramatically, right, on these drops. I mean, they could probably try and hold up a little bit like they did over here, right? But ultimately, look what happened when they did that. Price it just drove to the downside. Our upside, the downside right now is not looking too great. I know I talked about some altcoins, some potential good looking ones in the past. Again, I'm not talking about anything that's crazy up. Lucid is actually crazy down, and it could come down further in reality. But I'm kind of bullish on it because it's a low cap coin. It doesn't have a lot of liquidity. So if it doesn't have a lot of liquidity can't really leave it. Um, I've talked about some different coins over here that have potential to move up. I told you guys they were going to come down before they went up. So, these are different structures I'm looking at, but these structures are all mapping out to be exactly the same as what I'm looking at with other coins. Um, you know, that being said, we talked about gold the other day. Gold is also looking like it wants to come down. Right now, just too many things are saying down and nothing's saying up in reality, right? Even oil's dropping. So we got everything across the board dropping together. I know a lot of people like to say, okay, oil drops, these things pump, or these things pump and oil drops. And they like to use these vice versas. It doesn't always have to play out like that. In the current economics and the way that things are with the Fed and everything else, we could definitely see everything kind of fall together. We got Disney over here. Look at Disney. This is complete insanity. Look at these moves on Disney. You really think people are interested that much right now in Disney with the current world economics? We're talking a place that provides a service that is just entertainment. Entertainment is the last thing most people are thinking about right now with the current economics. I think that I think a lot of people just stepped in to get wrecked. You see the RSI straight up, stochastics hitting the top right here. We aren't even at the top of the RSI, and the stochastics saying no, no more. These are some crazy moves right now that I'm seeing in a lot of these markets. Way too bullish. Way, way, way too bullish. I think the Fed's going to step in, see this, and they might raise rates higher than people think. I'm not saying 100 basis points, but they could go 75 or even to 50. I think again that would be bad situation. Those prices will get priced in. I don't think the market is pricing in a recession though. I think the market is simply pricing in rate hikes. I think at the end of the year we will hear the words recession, and probably Q1, Q2 we will see a very bad downturn. Again, I'm thinking September drop, October, November pump, right into the midterms. December we start to drop, and then at the beginning of the next year, this is my thesis, right? Q1, Q2, we'll start to see even worse conditions, and that's where really we could see that $500 Tesla. Really, I didn't even think about it. Like timeline wise, it makes sense, right? We can pump all the way up to the top here, have Tesla come all the way down to this $500 range, and this is your buy, in my opinion, because I think, in my own perspective, I think Q1, Q2 of next year, that will be probably the bottom, in my opinion. And I say the bottom, I don't mean the bottom of market. I mean like the bottom of the move. We'll see that. It could be a double bottom. It could be a little bit higher bottom. It could be whatever, right? But at the end of the day, the purpose is to find the next move, and that's the next move. Um, Ultimately, I think if you think in cycle context with crypto, especially with cycles, I think a lot of these altcoins they're going to get destroyed. Um, had to come out and say this. I know it's kind of a little bit deterring. We talked about Solana for a while. I've told you guys many, many times. Expectations were to break out before break down, but it looks like they're going to come down first, and these things could possibly not recover. We got Google over here doing the same thing. Google's pretty much at a standstill at resistance, right? Standstill at resistance. And the reality is, I think most of these stocks are done. I think that this is their high. Ethereum, we talked about this. We've already fallen out of the wedge. I'm expecting a pull down, probably into a retrace, aka retest, and then just a fallout. Um, Again, these are just my expectations on price. That would be the low, and if we break that, I'm expecting price to really kind of trend down for me. A lot of people, I think they're looking at speculating probably around this $1,200 range, this support right here. So this consolidation, we might find that as support too. That could always happen. That might be a good position to take a position in September. Once we come down, kind of, and this will be a short term play. Just FYI, this is not a buy hold. I would probably take a position at the bottom of September, whatever that may look like, right? When fear is the highest, and then expect a pump probably October, November, because I'm expecting them to try and produce a good economy for a couple months at least until into the elections, and then after the elections, all rules are off the table, right? Everything can tank. It doesn't matter. They already got control. So if we look at it from that perspective, I would expect this to kind of play out in that manner, and then you'll probably get a good pump. You got to get out by November, October. Take your pump, get off the train. It's not the end, right? Understand the cycle trading, understand the seasonal trading. These things are things. You can look them up. Cycle trading, seasonal trading. There's different points in the year where you get liquidity, and there's different points in the year where you don't get liquidity. AKA summer's one of those ones you don't, right? January, February, March, sometimes you do, sometimes you don't. Just depends on whether it's a bull market or bear market. Right now, we're in a bear market. So we're going to continue to not see profits in January, February, March. We're going to see the same thing as last year, or not last year, but this year, 2022. And then, in 2023. And then probably 2024 is where we'll see the bull run again. That'll be January, February, March, and December will be kind of your buying opportunity. October, December, if you're looking to get in at those prices. If you're looking to get in at the lows, you're willing to maintain the pain. Hey, you could buy in the end of September. You could buy probably in Q1 and Q2. You're just going to be dealing with a lot of pain downside, long term perspective. If you're looking at long term, training wise, I would follow kind of the monthly guideline that I've pretty much outlined. Um, and that's basically all I can tell you. I pretty much laid out all my thoughts on the current market. I gave you guys kind of my whole game plan on what I'm going to do moving forward because I am going to play exactly how I told you guys. I'm expecting to drop in September, and I'm going to play on that, and I'm going to expect a long from that position until October, November. If it doesn't play out, it doesn't play out. I'm not going to put a significant amount in September. I'm going to probably only allocate probably 5 or 10% of my total portfolio at that point. And then once I allocate that much, we'll see what happens. I think it will be a pump into October, November due to elections. Again, all right. I hope you guys appreciate my input. I hope it helps you guys get a good outlook. And until next time, I'll see you later.